Liability insurance is about damage you may cause to someone else, not damage you suffer yourself. If your mistake injures another person, damages their property, or creates a legal claim, liability coverage may help pay the cost. It is one of the most important parts of insurance because one accident can become expensive quickly. The word liability means legal responsibility. If a visitor slips on a broken step at your home, they may claim you failed to keep the property safe. If you hit another car, the other driver may claim repair costs and medical bills. Liability insurance exists for those third-party claims. This is different from coverage for your own property. Home insurance may cover your damaged belongings under one section and your responsibility to others under another. Auto insurance may cover damage to your car separately from damage you cause to another car. The direction of harm matters. A simple example is a dog bite. If your dog bites a guest and the guest needs medical care, liability coverage in a homeowner's or renter's policy may respond, depending on the policy and local rules. The insurer may pay medical costs, legal defense, or settlement amounts within policy limits. Another example is a car accident. If you are at fault, liability auto insurance may pay for the other driver a Euro-S repair bills and injury claims. It usually does not repair your own car. For that, you would need collision or other first-party coverage. Mixing these up creates nasty surprises after an accident. Policy limits are critical. If your liability limit is $100,000 and a covered claim costs $300,000, the policy may not cover the full amount. The remaining cost could become your personal responsibility. Low premiums can look attractive until the limit is too small for the risk. Legal defense can be a major benefit. Even if a claim is exaggerated or disputed, defending yourself can cost money. Many liability policies include defense costs, but the details vary. Some defense costs sit inside the limit, while others may be outside it. That difference can matter in a large claim. Liability coverage has exclusions. Intentional harm is usually not covered. Business activities may be excluded from a personal policy. Certain vehicles, high-risk animals, professional advice, or contractual promises may need separate coverage. Reading exclusions is not optional when liability risk is serious. Businesses need liability insurance because customers, suppliers, employees, and visitors create exposure. A customer may trip in a store. A contractor may damage a clienta Euro-S property. A product may injure someone. General liability, professional liability, product liability, and employer-related coverage handle different kinds of risk. Professional liability is different from general liability. A consultant, doctor, architect, or accountant may cause financial harm through advice, errors, or negligence. A general liability policy may not cover that. Professional liability, sometimes called errors and omissions coverage, is designed for service mistakes. Umbrella insurance adds another layer. It can provide extra liability limits above home, auto, or other underlying policies. A serious car accident or injury claim can exceed standard limits. Umbrella coverage is often used by people who want more protection against large lawsuits. Liability claims usually require documentation. Photos, incident reports, witness names, repair estimates, medical bills, and written communication may all matter. The insurer needs to understand what happened, who may be responsible, what damage occurred, and whether the policy applies. A common mistake is apologizing in a way that admits legal responsibility before the facts are clear. Being kind is fine. Saying too much, guessing fault, or promising payment can complicate the claim. After an incident, report it promptly and let the insurer investigate. Another mistake is assuming small incidents stay small. A minor fall may later involve medical treatment. A small leak into a neighbor Euro-S unit may spread. A fender bender may lead to injury claims. Liability insurance is valuable because early costs are not always the final costs. Premiums depend on risk. A driver with accidents, a business with public foot traffic, a landlord with multiple units, or a homeowner with certain hazards may pay more. The insurer prices the chance and possible size of future claims. Higher risk usually means higher premium or stricter terms. Liability insurance does not remove the need for prevention. Fixing broken steps, driving carefully, training staff, using written contracts, and keeping safe premises all reduce risk. Insurance is a financial backstop. It should not be the first safety plan. When comparing policies, look beyond price. Check the limit, exclusions, defense language, covered activities, territory, deductibles if any, and how claims are handled. A cheaper policy with a narrow definition of covered liability may fail exactly where you need it. Liability insurance protects against the financial consequences of harming others by accident or negligence. The key questions are simple. Who could be hurt? What could be damaged? How large could the claim become? And does the policy actually cover that situation? Those questions turn liability from a vague fear into a manageable risk. Personal liability can follow ordinary life. A child breaks a neighbor's window. A guest trips over a loose rug. A small kitchen fire spreads smoke into another unit. These events may not feel like lawsuits when they begin, but they can create claims for injury, repair, cleanup, or legal responsibility. Landlords face special liability questions. A tenant or visitor may claim that poor maintenance caused injury. Broken lighting, loose railings, wet stairways, or ignored repair requests can become evidence. Insurance may help, but repeated neglect can create coverage problems and legal exposure. Product liability shows how responsibility can extend beyond the person who directly sold the item. A defective appliance, unsafe toy, or contaminated food product can injure someone. Manufacturers, distributors, or retailers may all be involved depending on the facts and local law. The claim process often starts with notice. The insured reports the incident, shares documents, and avoids handling the dispute alone. The insurer may investigate, communicate with the claimant, appoint legal defense, or negotiate settlement. Delayed reporting can make the claim harder to manage. Liability settlements are often practical decisions, not dramatic courtroom endings. Both sides may prefer certainty over years of legal cost. A settlement can resolve the claim without admitting every accusation. The insurer-s role is shaped by policy terms, evidence, limits, and defense strategy. The value of liability insurance is easiest to see before a claim exists. It gives ordinary people and businesses a financial shield against mistakes that could otherwise threaten savings, property, or future income. The best policy is paired with careful behavior, good records, and enough limit for the risk. For example, a homeowner may think the biggest risk is a broken chair or a damaged phone, but the larger risk may be a guest's medical claim after a fall. A shop owner may worry about stolen inventory, while the more serious exposure is a customer injury near the entrance. Liability coverage is about the claim someone else brings against you, which is why the limit matters so much. A parent hosting a birthday party, a freelancer visiting a client's office, or a driver borrowing a friend's car can all create liability questions before anyone expects them. The useful habit is to imagine the claim from the injured person's side. What happened? What did it cost? And who may be responsible?